Happy Money Monday, secured entrepreneurs. Miss Aurorah is back. Okay, in this video, Miss Aurorah is going to answer your questions about something that was said in the Special Needs Trust video. Yes, we all know that the Special Needs Trust is being created to provide for a disabled person, whether they are disabled mentally or they are disabled physically. And what this is doing is assuring that this individual will receive Social Security benefits, Social Security disability benefits. We all know that a disabled individual that has $2,000 or more in assets would be disqualified. They would no longer qualify for the disability benefits coming by way of Social Security. So some of you fired off an email to Miss Aurorah, and I want to thank you for emailing. Please continue to do so at info@aurorahdayconsulting.com. And you're saying, Miss Aurorah, what are you saying? I've been waiting to get 62 so that I can apply for my SSI. I want to be retired. I want to collect that money. And it looks like I may not even be able to qualify for real until I'm about 67, the way the numbers are working. Okay, so many of you have expressed your concern. So in this video, I'm going to show you right on their website that Mr. Aurorah didn't make this up. This is something that they are letting all of us here in the United States know how it is you're going to qualify for SSI when it is you are ready to retire. This is how they're telling us that is going to go. Mr. Aurorah didn't make that up. The other thing that I'm going to address in this video, because I think that some of you are getting Medicaid and Medicare confused. You're trying to ask me about Medicare trust, and you're saying, you know, what is this about the Medicaid trust and Medicare taking my mom's house and things like that? Okay, I'm going to clear that up in this video because we don't want to have any type of confusion. Okay, can we do that? All right. So for those of you who do not know who I am Miss Aurorah Dey, and this is the Secured Entrepreneur Movement. All right, now, secured entrepreneurs, here we are on MedicaidLongTermCare.org. I'm going to clear this up for you because many of you are under the impression that it is Medicare that has the payback. That is not correct. Okay, I'm going to talk about the Medicare trust in a second, but to answer the question relating to the payback, that is Medicaid. And the Medicaid estate recovery has been required by law for every state since 1993. You see it here on their website, okay? So they're telling you how the state takes a home, often using a lien. How Medicaid estate recovery rules and clawback apply to one's home can vary quite a bit by state. Some states won't use MERP if the home is valued below a certain amount. We can guess what that's about, okay? Texas, for example, does not try to be reimbursed from a recipient whose estate is valued below $10,000, while Georgia's limit is $25,000. Medicaid can put a lien on a recipient's home as part of the estate recovery process. But not every state will do this. A lien prevents the sale of the home until all of the homeowner's debts are paid. This means a Medicaid recipient can't transfer ownership of a home before death to prevent it from being used to pay back state Medicaid. Understand what is happening here, which is why your trusts are important to protect property. Okay, pay attention to what we just read. A lien will be filed by the state after the recipient moves out, as long as they are not expected to ever move back in.
How many of you have already experienced an ailing parent or grandparent that had to be hospitalized and then go into a nursing home? You know that the individual is never going to go back to their home. Raise your hand, okay? The lien gets lifted if the recipient moves from the home or if the home is sold to pay back Medicaid. Medicaid cannot put a lien on a home if any of the following people still live there: the recipient's spouse, recipient's child who is under 21, recipient's child who is disabled or blind, recipient's sibling with partial ownership. Understand that. And King David's all in the conversation, okay? The process of selling a home and collecting debts via MERPs will often be contracted to an agency outside Medicaid, like a health management service. The home is put up for sale with a MERP claim on it. Once a buyer is found, the MERP claim must be addressed before the sale can close. Okay? So there you have it. It is not Medicare, it is Medicaid in every state. And then if we come on down, we're going to see how often is the Medicaid estate recovery program used to recoup costs. Every state has a Medicaid estate recovery program and will use it to be reimbursed for Medicaid long-term care costs unless certain exemptions apply. These are the reasons a state Medicaid office will choose not to use MERP to recover costs of long-term care. The recipient's spouse is still alive. The statute of limitations has expired, and they're going to tell you what those are below this. The deceased has a child under 21 years of age. The deceased has a blind or disabled child. The sibling exemption applies. This means the sibling has an equal interest in the deceased's home, but the sibling must have lived there for more than a year before the recipient moved into a nursing home. A recipient's adult child lived in the home for at least 2 years, serving as caregiver before the recipient moved into a nursing home. And so there's a caregiver child exemption as well. All states also offer undue hardship waivers. The waivers are granted and estate recovery is prevented if the heirs of the deceased Medicaid recipient will face undue hardship because of the state's Medicaid estate recovery claim. Every state is allowed to use its own definition of undue hardship, but there are federal guidelines as well. These federal guidelines declare that undue hardship exists if losing the estate subject to recovery would lead the heir to require state assistance, meaning we don't want to put anybody in a position where we got somebody else on the system, okay? Or if inheriting the estate would mean the heir no longer needed state assistance, or if the estate, or if the heir no longer needed state assistance. Or if the estate is the sole income producing asset of surviving heir, or the estate is a homestead worth 50% or less of the average price of a home in the county, or if there are other compelling reasons. Comment below, Secured Entrepreneur. So now, or quickly before we get into the SSI, I want you all to understand, because you're asking about the Medicare trust. Understand that what Ms. Aurorah has been teaching here in the Secured Entrepreneur movement is that you would create a strong, irrevocable trust, period, or a few strong, irrevocable trusts to protect the assets of yourself, to separate you from the assets of the business, because you want to protect the assets of the business in other trusts and things of that nature, okay? So at all times, you want the layering effect. You want the wealth cycle. Now, understand that when you or your parent, your grandparent, your family member is applying for Medicare, there is a 5-year look back. The state wants to know exactly what this person had possession of, what this person owned. Was it a vehicle? Was it a home? Things of that nature. okay, before they make the determination of qualification. So if in fact you are preparing your trusts so that you have a parent or a grandparent, any family member who you already know will need to qualify for Medicare, I agree that you need to get going on that, because if you are transferring assets, like right now, like say your family member needs a trust because they need to qualify for Medicare like next week, it's not going to work because they're doing a 5-year look back. But if you know in advance, my mother is of age, if she lives another 10 years, there may be something that will come up that we will need to have the assistance of the state. Then yes, you need to go on ahead and get that trust done, because there is a 5-year look back. You need to go on ahead and start transferring your mom's home into that trust, whatever it is of value into that trust, because the 5-year look back is serious, okay? And act like they can't find things. You need to think again. Okay, so let us move on to talk about the Social Security. So here we are, secured entrepreneurs at SSA.gov. Here we go. Who can get SSI? Adults and children might be eligible for SSI if adults and children might be eligible for SSI if they have little to no income and little or no resources and a disability, blindness, or are age 65 or older. Number one, if you have little or no income, like wages and Social Security benefits, SSI is generally for individuals who don't earn more than $1,971 from work each month. SSI is generally for individuals who don't earn more than $1,971 from work each month. Basically scraping the bottom of the barrel. The income limit increases for couples and when parents apply for children. We also look at other sources of income besides your job, like disability benefits, unemployment, and pensions. So then they have it down here, which is why Mr. Aurorah is telling you, you can come check this out yourself. Start doing your numbers now if you're actually looking forward to collecting SSI. See the income limits for SSI eligibility. Choose your circumstance. Hey, choose one. Are you an adult? Are you a child with a disability living with one parent? Are you a child with a disability living with two parents? A child with a disability not living with their parent? Okay. And then optional, enter pre-tax monthly work earnings. Well, you already know, you better put in there less than $1,971. Enter monthly income from non-work sources like unemployment or benefits. Again, it better be way below $1,971 for the month. And then, okay, we're going to see the results. And they let you click onto, to which I did. I clicked onto this next page. Learn what doesn't count towards your income limits. We're going to go there, but wait a moment. Number 2, you have little or no resources, things you own. Hello? I need the bell. I need to start bringing the bell in here because I'm telling you, common resources are vehicles and money in bank accounts. Your resources should not be more than $2,000 for individuals. I'm telling you, Miss Aurorah can't make this up. $3,000 for couples. If you're a parent applying for a child, these numbers increase by $2,000. Learn what doesn't count towards your resource limit. So, and I went to both. Learn what doesn't count towards your income limits and learn what doesn't count towards your resource limit. Number 3, you have a disability or are age 65 or older. If you're age 64 or younger, you must have a disability that affects your ability to work for a year or more, or will result in death, or severely limits daily activity for children with disabilities. If you have a disability, you'll also need, now never mind that your behind is disabled. Let's just overlook the fact that your ass is disabled, right? Okay. You'll also need to prove you've earned less than $1,550 from work per month in the month you're applying. Ms. Aurorah can't make these things up. Citizens ages 65 or older don't need to have a disability to get SSI. You don't need to have a disability. What you need is to be up here. Little or no income, little or no resources. So here's the exceptions to SSI income and resource limits. Some of what you make or own won't count towards SSI limits. For SSI, income is money you get, such as wages, Social Security benefits, and pensions. Income can also include food and housing. Resources are things you own that have value, such as a second vehicle or money in a bank account. How many of the secured entrepreneurs know what Ms. Aurorah has been shouting to the rooftop since 2015? Comment below. Income limit exceptions. Generally, things that don't count towards your income limit include state SSI supplement payments, Supplemental Nutrition Assistance Program, which we know is SNAP benefits, food stamps, Section 8 housing vouchers, rent rebates or property tax refunds, temporary assistance or needy families, certain expenses for people with blindness, certain expenses for people with disabilities. Your monthly income limit may be higher if you live in certain states. States with a higher income limit. Resource limit exceptions. Generally, things that don't count toward your resource limit include your home and the land it's on as long as you live there. 1 vehicle per household. Most personal belongings and household goods. Property you can't use or sell. Why would any of this be attractive to any thinking, feeling individual? Why would any of this be attractive? And I'm talking any stage of life, because we've been in an internet stage. We're in the information era for how many decades now? Like, how is any of this attractive? There's too many ways to prevent most of this. And again, as Ms. Aurorah has repeatedly stated, if in fact you actually do want to collect some of these things, why? Because you put in your 10 years. Because they tell us here on SSA.gov that you just had to work for 10 years and pay into Social Security for 10 years to hit the first qualification. That's like one of the first things. You had to have worked for 10 years and have put into this plan for 10 years. Okay, now here we are with what are resources? Resources are things such as cash, bank accounts, stocks, mutual funds, and U.S. savings bonds, land, life insurance, personal property, vehicles, anything else you own which could be changed to cash and used for food or shelter, and deemed resources. What are deemed resources? Sometimes we deem a portion of the resources of a spouse, parent, parent's spouse, sponsor of a non-citizen, or sponsor's spouse as belonging to the person who applies for SSI. We call this process the deeming of resources. If a child under age 18 lives with one parent, $2,000 of the parent's total countable resources does not count. If the child lives with two parents, $3,000 does not count. We count amounts over the parent's limits as part of the child's $2,000 resource limit. Why are resources important in the SSI program? The value of your resources is one of the factors that determines whether you are eligible for SSI benefits. However, not all resources count for SSI. If the value of your resources that we count is over the allowable limit at the beginning of the month, you cannot receive SSI for that month. I'm going to read that again. If the value of your resources that we count is over the allowable limit at the beginning of the month, you cannot receive SSI for that month. Okay. If you decide to sell the excess resources for what they are worth, you may receive SSI beginning the month after you sell the excess resources. You've got to be at the bottom of they don't want you to have jack, okay? You may even be able to receive benefits while you try to sell the excess resources in certain situations. I want to get on to retirement. Here we go. Social Security and retirement. The Social Security retirement benefit is a monthly check that replaces part of your income when you reduce your hours or stop working altogether. It may not replace all your income, so it's best to identify other ways to pay your monthly expenses as you age. See if you're eligible. Eligibility is always based on work. Most jobs take Social Security taxes out of your paycheck so you can get a monthly benefit in retirement. And they keep telling you, check for your eligibility. Learn how to apply. Plan for retirement. Estimate your benefit amount. Determine when to apply. And explore other factors that may affect your retirement planning. Check eligibility for Social Security benefits. Answer a few questions to see if you qualify for benefits right now. How long it'll take? 10 minutes or less. Our benefits are there for you when you age and retire. Now, our benefits. But you had to work. Oh my Lord. Okay. Age and retire. Can't work because of a disability. Lost a spouse or a young child loses a parent. Have difficulty paying for essentials like food, clothing, and a home. We'll tell you which ones you may be eligible for. The answers you share today help us understand what's going on in your life right now. We can't determine if you'll become eligible in the future. Okay, so since you had to work, you can review record of earnings. Make sure our record of your yearly income is up to date. Every year, your employer tells us how much money you earn so we can update your Social Security record. If you're self-employed, you tell us directly. We calculate your monthly retirement and disability benefit by looking at how much you've earned. So it's important to make sure your record is accurate. Check it in August to make sure last year's amount is correct. Now, here's the last thing I want to say to the secured entrepreneurs. Simply because many of us are doing business in the way that works best for us. Miss Aurorah definitely does business in the way that works best for Miss Aurorah, okay? So if in fact you are not paying into Social Security, but you worked prior to starting your business, you worked prior to going from Sole Proprietor to CEO, you still have a record because you have to have had put in 10 years. So if you've already done that, then there is a record here. And if in fact you're saying, oh no, you're going to get your benefits, then you already know that you really have to be stone cold broke. That means that you don't own anything. You have control over everything, because of course you're going to continue to live comfortably. You're not going to allow the Social Security Administration to dictate how it is you're now going to live. One car per household, and what your resources are, how your resources are valued. Why? Because none of this belongs to me. I'm doggone near homeless. Yes, I qualify for my SSI benefits, and we already know however much you put in is going to determine the type of check that you get monthly anyway. Okay, so again, Miss Aurorah is letting you know this is not a plan. This is not a plan. I think that it will help. I think it does help some people. It's a help to some people. And some people actually really truly do need it because they never had a plan. So hopefully after viewing this video, and please share this video with everyone that you actually like, okay? Simply because nobody is going to this website. Most people are not coming to research these things, 30 years before they are thinking to work 20, 30 years for a company and then have to retire, okay? And many people have gotten their bubbles burst recently, being told that they will not receive a pension from their employer. I've had the phone calls that you thought you worked for a company that had a pension plan. You've been there forever and a day, and then they say they have to remove it. Well, what happens to the monies that you were supposed to get before they decided to remove it? So get the documentation on that. Like these things are actually happening to people. This is actually going on for those of you who are not in the know. This has actually happened. And so the company has to provide something or not. We're trying to find out. It's real, okay? So please, secured entrepreneurs, do all that you can to assure that you are beyond a seven-figure earner, and to assure that all of your assets are protected. Because yes, I do agree, if you worked and you paid into Social Security, collect the check. Okay. And so now you see how you're actually going to do it. That's what I want to share for this portion of the video.
So there you have it, secured entrepreneurs. What Ms. Aurorah would like for you to do now is go down in the description box, click on the link to watch the Mastering Tax-Free Wealth training. This is imperative, especially now that we have the Corporate Transparency Act reporting. Ms. Aurorah wants you to be fully aware of what is going on and how it is you're going to be able to make your moves properly, so that in the event that you may have to rely on some type of government assistance, if you're blessed to live that long, okay, you will be set up properly way before anyone's going to have to start talking about what it is that you have, what it is they're going to take from you in exchange for a bed at a nursing home and some care that only Medicaid or Medicare can afford to give to you. All right. So that's all Ms. Aurorah wants to share in this video. You can find me at AurorahDayConsulting.com. And until next time, ta-ta.